All right, let's broaden the conversation out. Let's bring in Emily Roland of John Hancock Investment Management with us here at Post 9. Joe Terranova is as well, Virtus Investment Partners and a CNBC contributor. Emily, you get the first go. Do you agree or disagree with Mr. Branch?
Look, markets are fighting the Fed right now, and they are winning. And I think that there's a few things going on. One, the data have come in better than feared. I think that that's the mantra or the bumper sticker of 2023. When you look at the earnings data, when you look at the economic data, we're seeing the Citi Economic Surprise Index here seeing a bounce. The other element here is there were headlines that came across at the end of last week that China may be stimulating. And that has caused a huge risk on bounce across markets. And then the final thing that we see is that there's almost a pivot party happening going on where markets are celebrating this idea that the Fed is getting towards the end of their hiking cycle. And it doesn't matter where you see it. It's all across risk assets. It's Japanese equities reaching 30-year highs. It's small cap stocks seeing a huge run over the last few weeks here. It's, of course, the AI names catching a bid here. So there's definitely been a very swift and sharp and almost violent rotation across different parts of the risk assets. And this is a period where it gets pretty easy to get whipsawed and pretty easy to make mistakes here.
Are we fighting the Fed, Joe, or are we understanding the Fed? Are we understanding the fact that they're probably not going to hike next week or the week after? And even if they do hike again, they're much closer to the end than the beginning. Are you in agreement with Greg Branch or not?
So Greg mentioned August, and let's remember exactly what happened in August. Chairman Powell smacked the market. There was the Jackson Hole speech on Friday, August 26th, where he used
8 minutes.
And he told us what? He said there would be pain for households and businesses. That's why the market fell. The VIX at that time was somewhere around 19. The VIX today 13. Is at its lowest level since before COVID. So if, in fact, Greg is correct, not with what he wants, but what he sees, the insurance that you could buy to defend against a significant downfall in the market is ridiculously cheap.
Let me ask you this just straight up. The premise that we laid out at the beginning of the program, the question, who's in control of this market now? The bears were undeniably in control for the better part of the last, 17, 16 months. Are the bulls now in control? Have they taken the reins of this market?
I think the bulls are in control if you rely on a quantitative approach. If you rely on technicals, that's where the bulls are actually in control. You can't make a fundamental assertion beyond technology that looks overwhelmingly bullish. What is bullish is the technical formation of the market.
Emily, I mean, the market's trying to broaden out a little bit.
Yeah.
Bears like Greg would say it's, the Magnificent Seven have carried the entire market higher. And that's a valid point. But it does feel like it might be on the verge of broadening out a bit. What do you make of that? Do you think it's legit? If that does happen, is that another bullish signal in your mind?
Yeah, the broadening out is definitely a positive development. We still like mega cap tech. Through our conversations, we've been there. Technology stocks are the poster child for quality. Quality is companies with great return on equity, great balance sheets, tons of cash on their balance sheet. If you're a company right now, you don't want to need to tap the capital markets in order to grow, as the cost of capital has risen so extensively. So that's why we've remained in tech. But we do think diversifying away from that makes sense. Now, we talked before about this pivot party, and it's being celebrated across risk assets. If I'm somebody that's attending the pivot party, I want to go to it. I want to be there because these late cycle environments can feature incredible bounces across risk assets. But I would suggest maybe sipping a light beer instead of reaching for the tequila right now, because you might have fewer regrets the next day.
Okay.